Hey y'all, welcome to another conversation straight out the group chat. I am your host, as you already know, Shalonda. I am here with Mr. Little. He will be discussing life insurance and its benefits. This is just generally basic information when it comes to life insurance and its benefits. So we're just got a few talking points. We don't want to be before you too long, but I did want to give y'all the education from someone that has been in the business for 20 plus years. And go from there. So, Mr. Little, how you doing today?
I'm doing great. How you doing?
I'm doing good. Thank you so much for asking. I want to thank you for hopping on the podcast. Um, like we just talked about off the camera, I think that this is a missed opportunity for our community. We end up having to have fish fries and GoFundMe's, etc., where we could have just spent $5 to $10 a month on a term life policy, and we could have been covered when it comes to we all know that we're leaving here at some point in time. So I want to thank you for your knowledge and for your time today.
Okay.
So the first talking point that I have for you is what are the main benefits of having life insurance?
The main benefits of having life insurance is really to protect the ones you leave behind.
Right.
Um, and that's the main benefit for it. And we got to use the concept called a theory of decreasing responsibility, meaning as you get older, your responsibility should decrease. But
Right.
while you're young and you have kids, you may have a house, you have different things going on in your life. That's the most time you need the most life insurance. Because when you're young, that when you need when you're young, you need the most life insurance. But as you get older, it changes. Meaning your responsibilities decrease.
Right.
So as you get older, your responsibility decrease. But then, because as you get older to the 50s, 60s, and 70s, and that kind of thing, your children are grown. There's no really a lot of debt.
Mhm.
Everything is paid for. Most times your children are grown. Sometimes they come back with more kids, but 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 you that 30 degrees responsibility works.
Okay. Okay. So how does life insurance, to your point where you're saying decrease in financial responsibilities, how does life insurance provide financial security for families?
Well, just we know our date of birth. We just don't
Right.
know our date of death,
Right.
right?
Sure.
And how it provides financial security because it protects the ones that pay off anything that you leave behind. We use the concept of what we call a dime, DIME. The
Okay.
D stands for death, I stands for income replacement, M stands for mortgage, and E stands for education. And if all four of those things are covered, you're covered what they call the dime. And that is for the ones you leave behind.
Okay. Okay. So this wasn't on our list, but I just had like a separate talking
Okay.
point for you.
Hmm.
So when we're talking about, dime and leaving family and all these type of things, it's
Hmm.
been my experience with life insurance that again, it's one of those things that people in our community, you already know, the black community, we don't value as much. So I guess when I've been working at these banks and different credit I see where other communities they already have all these things in place. Life insurance, beneficiaries on their accounts. And so when somebody passes away, let's just say Billy Joe passes away, he then passes his whole policy on to his wife or his daughters or whoever, Ann or whoever, and they set for life.
Right.
So can you talk about like is there a fear in our community or like what do you think it is being that you've been in the business for this period of time?
Well, it's three reasons why people don't have life insurance. Number one, they don't see the need for it. They don't see the importance of it. Number
Okay.
two, they don't think they can afford it. And then number three, they never got around to it. Let's talk about number two. They
Okay.
don't think they afford. They don't see the need for it, and that's where the education of comes into play. That where they got to talk about. You know, reason why you have life insurance. Life insurance is not just to have for you. It's to have for ones you leave behind. And I
Yes.
think the most selfish people in the world are people who don't have life insurance. And they got kids and they got people that they take care of, people responsible for the people that they living for. For them not to have life insurance, I think that's one of the most selfish things in the world. Because,
Mm-hmm.
I always ask one question to a lot of my clients
Hmm.
that you have two that took care of maybe four, five, or six. Papa
Right.
parents, right? Why two? Why can't those same six take care of two? See, you see what I mean?
True, I
Because
understand.
we've been misguided for so long that
We
you'll be surprised how many people that's grown adults that have three, four, five kids, got cars, houses, and they don't have life insurance. They don't have life insurance, and they don't understand. Like you just said earlier, is what you pass on. You know, people go to funerals all the time.
all the
There's a
time.
lot of cry. There's a lot of crying and all that stuff, right? Some of y'all think that they be crying because they loved ones gone. They be crying because they're left with all this debt.
Oh my
Oh,
gosh.
what I'm gonna do now? What I'm gonna do now? Now that's just an inside joke though, but
No, but no, that's true.
it's real though. It's real.
It's true. Yeah, no, it's facts. And the thing is, like I was talking about in my experience, working in these banks and these credit unions, it's like you see people that they're talking about, like, the policy wasn't paid, or I can't find the policy, or things like that. And it's like I'm having to grieve this person on top of having to figure out how am I going to get their services, or their get them in the ground, or get them cremated, or whatever the case might be. It's just like
Mhm.
I have to then add that on top of grieving this person.
Right. You brought an interesting point because and now I'm talking about married couples now. I
Okay.
deal with a lot of married couples. I do a lot of single moms too, but
Hmm.
married couples.
Okay.
You don't want to have you be in a situation where, and this happens a lot in our community.
Okay.
What I'm about to talk about, where the husband say, "I'm straight," what you got going on? I'm straight. I'm good. I'm good. But the wife don't have no idea of what the husband have, or the husband don't have no idea what the wife have. You know
Mm.
what the most unclaimed money come from? It comes from life insurances because the company had no idea or no way of
Mm-hmm.
knowing that person passed. And then
Mm.
the wife didn't know he had three, four, five different policies because the husband always said, "I'm good. I'm straight. Whatever happened to me, she good." But she don't know what he have at work or what he have outside of work because they never had a conversation. They never had
Right.
that 30-minute conversation.
Yeah.
We take more time to plan a vacation than we do to take time to plan our finances.
Yes. Yes. And I honestly think, because like I shared with you before off the podcast, I have dealt with life insurance before, not as much as you have, obviously, but I think what a lot of it is that people don't like having uncomfortable conversations.
Exactly. You're right.
But at the end of the day, it's real life.
Exactly.
We all know, like you said, we all know what day we were born. We all know what time, whatever, but we don't know when we're going to leave here, you
Right.
know? So it's definitely imperative, like you said, 10 to 15 minutes. This is an easy conversation. I have this and such and such with this company, and you the beneficiary. This is what I just think I don't know. I don't know.
You're right. A lot of our parents, grandparents are so old school when it comes
Right.
to certain things too. But
Yeah.
I teach them. Let's have a red folder concept. What's the
Right.
red folder concept? All
Right.
your documents in that red folder. So if
Yeah.
something happen to me, go to the red folder.
That's
But
right.
they need to know what's in the red folder. You
Right.
make sure it's enough in the red folder. But
Yeah.
better have a red folder concept because you'd be surprised how many people don't even know what life insurance, where to start with,
Wow.
what numbers to call, that kind of thing. So it's a topic that's not don't like to be discussed, but it
Hmm.
happens, and then
Yeah.
it always discussed when somebody die prematurely.
Yes.
It's always discussed then. They want, "Well, we gotta get life insurance now." No, you should have been had life insurance.
Hmm.
I just had a good friend of mine whose
Hmm.
son died unexpectedly. Well, he had been sick,
Hmm.
and before I met with them 15, 16 years ago, he didn't believe in life insurance, but his parents did.
Okay.
His parents did. So they got insurance policies on him, and nobody knew he was gonna pass. He left behind five kids. He's only 43 years old.
Mm.
The people think you die when you're old.
Mm-mm.
No, death does not have a date.
Don't. Wow. Wow. So, okay, so we were just discussing about, the difference between, the benefits that life insurance can provide. So, what is the difference between a death benefit and cash value?
Good question. The death benefit is the face amount of the policy, whether it be a $50,000 policy, $100,000 policy. The cash amount is inside a cash value permanent policy that grows up to a certain level. And a lot of people don't understand how that works. And I'm gonna take a
Okay.
couple minutes to explain how it works. And like for example, if you was to die and you have a whole life policy, you have a cash value and you have a face amount, the death benefit, right? You don't
Mm-hmm.
get both. You only get one.
Okay, now wait a minute. Now you got to slow this down for me. So
Okay.
you said, let's just say, for example, me. I have a
Okay.
whole life policy for $100,000. Something happened to
Okay.
me. What now?
All your benefits are gonna get the 100,000. If you have 4, 5, or 6,000 cash value, that goes to the insurance company.
Oh, okay, okay. So they get the back end. The people that's the beneficiary, they get the full amount of whatever
The
the
face
policy
amount.
was worth.
Yeah. They get the
Okay,
face
okay,
amount. The
okay.
insurance company keeps the cash value. Now there
Okay.
are policies out there that you can get both, but you're gonna pay a higher premium though.
Okay, what's the policy?
Well, this that's some different. I don't like to get into different types
Okay.
right now, but
Okay.
because it's all based on individual preferences.
Okay, I
And
got
we
you.
have a policy called an IUL.
That's
Then
what
you
I was
get both,
thinking.
and IUL is good for the right person.
Okay.
But
Okay.
most people in our community cannot afford an IUL. I would throw that out there. I'm leaving it
Okay.
at
Okay. All right. That's good enough.
that.
Okay. So, can life insurance help cover expenses beyond funeral costs like debts or mortgages?
Great question. Remember I talked about the dime. The
Yes.
dime, right? The D
Mm-hmm.
stands for death, which we just talked about. The I
Mm-hmm.
stands for income replacement. M
Okay.
stands for mortgage, and E stands for education. So you
Okay.
just named it. Supposed to cover all those. But we've been taught that the only thing you need to cover is a funeral.
Right.
I
No,
mean,
right.
what sense does that make?
Right.
I say you young. Let's say you young. You're married. You got
Mm-hmm.
two or three kids. Some have more. You got a
Mm-hmm.
house. You got a
Mm-hmm.
car. What can a $10,000 policy do for you?
Nothing
What
make
can
me
a
mad.
$20,000 policy do for you? You
Nothing.
need anywhere from 4 or 5, 10 times your income to be
Mm-hmm.
covered. The people wonder why. Well, why do the dog leave with the kids when the parents die and all that kind of stuff? You can't feed them.
Can't
I
feed them.
mean, you need 200, 300, 400,000 with a life insurance. You'd be surprised how many people don't walk. Now you don't do that all your life. Remember the theory of decreased responsibility. You don't
Yep.
need 300, 400,000 all your life. You need it in your younger years while you're building your life.
Right. Okay.
As you get older, those debt will decrease.
Okay. I got you. Okay. Now, so I just when you were talking, I was thinking about a question. So let's just say, for example, I'm 33, so I get a policy that's a 20-year term, and I get to 53, and I outlive my policy. So then, is that just a policy that's sitting there, or like how does a term life policy work?
Great question. First of all, I recommend a 30-year term, but that's another subject.
Okay.
Uh, well, you that young, I recommend a 30-year term, but 20-year term is fine too.
Okay.
20 the term policies protect you during that term.
Hmm.
So if you die within that term, they get the 100,000. At the end of the term, you have to renew it, and
Okay.
that's why you have a lot of agents that go in and say, "Well, you just need a whole life policy," but the average person cannot afford a two, three, or $400,000 whole life policy
Right.
because they can't afford no $200 and $300 premium. But
Right.
they can afford a $40 or $50 premium.
Yes.
So the right way to do it is give them a good term plan in their younger years,
Mhm.
and later on they can get a whole life plan, what they call final expense, because that's all
Right.
they're paying for the final expense. But don't
Mhm.
put no final expense plan on a 33-year-old.
Right.
Look, I be wanting to choke agents out there when I see that. I mean, it don't make sense.
Nope.
This 30, I shouldn't have said that, but this 30-some-year-old have two kids, has a
Right.
house, has a dadgum car, and they got a freaking 20,000. Excuse me, they have a $20,000 policy on it. That don't
Too
make
much.
sense.
Yeah.
That don't make sense.
Mm-mm.
And so,
Yeah.
and people who teach you how to do that, because you have companies, all that. That's all they focus in. Oh, I'm sorry.
You
All they
good?
focus in is final expense planning, and I beg to differ. It's much more than just final expenses. So I had securities license, I had all those different licenses.
Mhm.
So you just don't walk around just giving somebody $10,000, $15,000 policy. Now, if
Right.
you're in the 60s and 70s and you live your life, yeah, that's all you need. But somebody in
Okay.
the 30s and 40s, no, you
No.
don't do that.
Now, so let me ask you this: when you say final expense, you're saying like those policies that come on the TV, where they're talking about just buy this with us and you'll have enough to cover your death.
Funeral expenses, yes.
Okay. 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 Okay.
Whether it be
Okay.
cremation,
Okay.
or $10,000 funeral, $15,000 funeral, or $20,000 funeral, it covers the final expenses.
Okay. Okay. I got you. Because I always
It could cover no mortgage or pay for
right.
kids to go to college.
Right.
20,000 can't go but so far.
That's it. Yes. And it costs 10,000 to leave out of here, to be honest.
Right, right.
See, I always been scary about those like a little leery about those commercials that come on TV that promote, because I never know, I guess the validity of it. I always question how valid it is, because I'm like, it just don't sound right.
They valid, it's just not valid enough insurance for most people.
Okay. Okay. That
Now,
makes sense.
again, every state, you look at different markets. Those
Okay.
final expenses are for people that's over the age of 50. They're
Right.
over the age of 50. But
Right.
there's some people that's 50 plus that need term insurance too. They need term
Okay.
insurance too because you have a 50-year-old that has 50 or 75,000, 100,000 left on their house. What can a $10,000 final expense plan do?
Not one thing.
Not one thing at all.
Wow. Yeah. Wow.
So
So okay.
when you have somebody
Go
who
ahead.
really educate a client, they
Yes.
help them understand. Because
Yes.
2 plus 2 equal 4, no matter who it come from.
Right.
1 plus 1 is 2.
All day.
If you educate the client the right way, you're
Right.
not gonna put them in certain situations that may be detriment to the families that's behind them.
Right.
You want to put them in a position where it says stay the same or better.
Right. And see, that's one to your point. I think a lot of us, like we were talking about earlier in our community, we just don't have the education. And then I think a lot of us, we're scared to ask questions. We're scared to look stupid. We're just scared to present ourselves in a certain manner. But I'm to the point now where if I need to ask questions 20 times so I can get it, I don't care. Because like stuff like this life insurance, this stuff is serious. This is talking about legacy. This is about what you're leaving
Mhm.
behind, how you're going to impact people that are married to or have children with, etc. It's just this is a different ball game. So I just think we need to take it serious. We definitely need to ask those questions. Ask until you get it, because that's what these insurance agents are in business for, is to help you understand.
I totally agree. I totally
Yeah.
agree.
Yeah. So the other talking point is, how does life insurance support long-term financial planning? I think you kind of touched on this earlier.
We kind of touched on that, but the way it's supported is because if you don't have enough life insurance, there is a premature death. It messes up all financial planning.
Right.
It messes up all financial planning. You might
Right.
have to give up your assets, and you shouldn't have to give up your assets. You should have to give up anything. So if you
Yeah.
have enough protection in place, it will cover all the assets. So part of the financial planning, remember, a house has to have a strong what to stand.
Foundation.
Exactly. You said
Yes.
it right there. You got to have a strong foundation. But what's the foundation of financial planning? Life insurance.
Life insurance. That's
Because
true.
the only way you can get your financial plan if you was to die prematurely.
Mm-hmm.
So if you die prematurely, if you had a foundation right, see, a house can't stand on a weak foundation.
Come on now.
A financial plan cannot stand if you got a weak foundation when it comes to insurances. I'm talking about you. See, we take our car, we pay our car insurance, right?
That's true. We got to
But
pay.
why won't pay our life insurance?
That's true. That is very
So
true.
which was more important, our car or our life?
Life all
Exactly,
day.
exactly. So financial planning starts with life insurance. It starts with
Hmm.
insurances.
I agree. I agree. So here's another question. I don't know if you could touch on this or not, or just small disclaimer. What are the tax advantages of like a life insurance payout?
Okay, good, good, good. All generally, all death benefits are tax free. You don't
Okay.
have to pay tax on death benefits. That there are situations that
Hmm.
will become a taxable item, but it's very rare. It's very few. For example, if you have an employee-sponsored plan and employer paid for it, and it's over 50,000, they could count it as taxable income. So, but that's kind of rare. But it could count as taxable income if you got an employer sponsored plan. But generally, all tax benefit, all cash, but not excuse me, all death benefits are generally tax free.
Okay, so what you're just mentioning is like with my job, I have if something happens to me, my salary for a year is covered. But what you're saying is in most instances, if it's less than 50,000, they'll pay it out without being a tax implication.
Exactly. That's
Okay.
that's an IRS thing. It changes, so you got to go through the IRS.gov and all that kind of stuff to get the updated figures. That's usually the IRS. It change. It can change. I
Okay.
don't like to give too much tax advice when it comes to
Right.
because I'm not. That's not my field,
Right.
but that's a general rule right there.
Okay. Cool. Good to know. Um. Okay. So how does life insurance fit into estate planning?
Good. Well, to keep it simple, when a life insurance has a named beneficiary, it avoids all probates.
Okay.
So just remember that. You don't have to
Okay.
worry about things going to the state when there's a named beneficiary.
Okay.
Like if you have a life insurance policy and your daughter is the beneficiary, your proceeds go to the daughter. It don't go off paying off any debts and all that kind of stuff.
Okay.
So you don't have to go through probate. You don't have to go through any kind of things like that, any kind of estate planning because it goes. You got it must, but you must have a named beneficiary.
Okay. Okay.
And
Now.
and also I want to say
Mhm.
that you have to update your beneficiary. Sometimes your beneficiary does what? They pass before
Yeah.
you. So update your beneficiaries also.
Mhm. Mhm. So then also to your point what you're saying about, beneficiaries, I would also say to add on to what you're saying is have a contingent beneficiary in the
Absolutely.
event that your primary beneficiary does pass. Have a contingent, and most places offer those, beneficiaries contingent, primary, whatever.
Absolutely.
Um so when I wanted to circle back to what you were saying about estate planning.
Okay.
So when you were saying that if you have a named beneficiary, now what I am seeing, and I know social media people put all kind of misinformation out there all the time, but I wanted to ask you when it comes to having like a trust
Hmm.
or having a will. I don't know how far in the weeds we can go into this, but it's just like for my own personal gratification, I guess, in terms of is it better to have a trust or a will?
Well, I have both.
Okay. Because
Because
I
a
always thought
trust,
that trust
a
was super
trust is what you're leaving as far as a monetary guide for the loved one, like a child or
right.
grandchild. That kind of that's you put the money into a trust. For example, if you was to pass and
Mhm.
your child is like 10 and he's beneficiary on there, they'll put the money into a trust until they turn 18 or whatever the guidelines you set for that trust for. A
Okay.
will is what happens when you actually pass.
Right.
So you want to have both in place. If you were trying to, it also depends on what you're trying to accumulate. We have to get a little bit more detail as far
Right.
as what you're trying to accumulate, as far as
Okay.
the kids and all that kind of stuff too.
Okay. Okay. I just was curious because I keep seeing about all this trust versus will, but I just want to ask you now. So, can life insurance help with education or retirement savings?
Generally speaking, yes, it can. It
Okay.
can,
Right.
but you got to be careful.
Okay.
There's other vehicles that you want to use
Okay.
to do those things. For retirement, do a retirement account.
Right.
For college, do a college fund.
Okay.
None of those things have insurance at the end of it, do they?
Right.
So to answer your question, it could happen, and there's
Okay.
clear possibility that can happen but there's other investment vehicles. There's things called 529.
I heard about those.
That's a
Yep.
plan. That's not an
Yep.
insurance policy.
Yep.
There's educational IRAs. That's not an insurance policy.
Hmm.
There's different things you put money into that can fund it to get more rates of return. A retirement account and insurance policy are two different things.
Right.
Two
Okay.
different things.
Okay. So, um, so for and this is just one that I think me and you talked about it. So, What are the main reasons why a responsible individual or family does not have life insurance?
Number one, they can't afford it. Or they think they can't afford it.
Okay.
Number two, they don't see the importance of it. And
Okay.
that's very important. They don't see the importance of it. And then number three, most of them never got around to it. They take more time to plan vacations and trips and all that kind of stuff than plan their own finances. They would tell, look, a married couple would take more time to plan a dinner date,
Mm.
go to the
A dinner
movies,
date.
a dinner date, and go to the movies than plan for their finances.
Man,
And it's sad, but it's true.
it's sad, but it's happening every day.
Every day. And
Every
then you
day.
have people that go different places, that kind of look. I love the traveler. I love dinner day. I love all that stuff. But you
Right.
gotta plan things too. I'm
True.
a I'm a planner.
Hmm.
My significant other, she think I plan too much, but I'm a planner.
Yeah.
I don't like to do things just to be doing things. I used to be like that, just do things
Yeah.
as spontaneous, that kind. When we get there, we figure it out. I don't do that no more.
Yeah.
Maybe I done got old. I don't know. Well, when we
So,
get there, we'll figure it all out. Nah, we're gonna figure something
uh-uh.
out before we leave.
Right. Exactly. Exactly. So, what additional living benefits can people access while they are alive when it comes to life insurance? Are there any or no?
Yes, it is. There are living benefits, and I like the concept of living benefits. Now, this is kind of new.
Okay.
This is not old. This is kind of new. Within the last probably 10 years or so, you can get a policy that has living benefits. I'm gonna pull up something real quick. I
Okay.
want to share. I don't know if I can share it on the screen or not, but
I don't. I'm sure you can. I just don't know how.
me and you both. I don't know how. But when it comes to living benefits, well, I just talk about them. When it comes
Okay.
to living benefits, there's three main living benefits. There's a terminal illness benefit. That's the one they only give you a certain amount of time to live, usually 12 months or less.
Okay.
Terminal illness. But now you have what they call a critical illness or a chronic illness. What's a critical illness? A critical illness that benefits that you're led to get part of your portfolio, not portfolio, excuse me, your death benefit early.
Okay.
Like in case like there's a heart attack, a stroke, or something like that, you get part of your death proceeds sent to you.
Oh, okay.
It's based on your diet. And look, people don't die from stuff. People don't die from stroke. I done had all that stuff before, so I ain't died from it. Okay,
Right. Right.
but it's great to have living benefits on your policy, and the living benefits are part of the premium that you pay, and you'd be surprised it's not that much.
Really?
Because you have living benefits. If you pay a regular $50 premium, $100 premium, whatever the amount is, that's included. Living benefits is included. And critical illness and chronic illness and terminal illness. And most policies have terminal illness, but now they got one for critical and chronic.
Okay.
And see, you never know. People are living from cancer now. People are
That's
living
yeah.
from strokes and that kind of thing. But to
Mm-hmm.
have access to your money where you can't go to work for a period of time, they make a world of difference for a lot of people,
Right.
and
Right.
that's what living benefits are. And every policy does not have them. It got to be a company that does living benefits with that policy. And if you can get a policy that has living benefits attached to it, it's a game winner.
Okay. Okay. Good to know. So you said this is a new concept?
Well, within like last 10 or 12 years,
Okay. 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 Um, Miss
maybe a
Denisha
little
said
bit
I'm
longer than
watching.
that. Yeah, maybe a little bit longer than that. But a lot of companies now are putting living benefits on their policies, though.
Okay. So you saying it's a good question to ask either definitely when you are getting a new policy.
Yes. Yeah.
Okay. Okay. Mr. said I'm at work watching. Hey, Miss Denisha, my mama said, what is a Roth IRA and what are the benefits of having one?
A Roth IRA is a retirement plan that grows tax free once you pull it out. That's who asked that question. That's a great question.
My mama.
Oh, okay. Kathy, you talking about Kathy?
Kathy, yes.
Hey, Kathy, how you doing, Kathy? A Roth IRA is a retirement plan that you put about the limits go up every year, but you put away money tax free until you retire. And if you leave it in there for a certain period of time, when you turn 59 and a half, you pull that money out, you don't have to pay no taxes on the gain off of it.
Mm-hmm.
But that's a Roth IRA. Now, a lot of people want to know how your Roth IRA for get a return, how the return on the Roth IRA are. Now that depends on what you put as far as investment. Some people use mutual funds. Some people use different accounts to accumulate money in a Roth IRA. But a good portfolio of mutual funds that's diversified, long term, 10 plus years, you can win.
You know what I'm noticing now too is people use the certificate of deposit Roth IRA
Uh-huh.
or the CD short term certificate, whatever the verbiage is now. But they use
Certificates of
those.
depreciation.
Yeah, right. Because
Nah,
that's exactly it.
because your money don't grow inside no CD.
Yeah.
Your money does not grow inside a CD. Depending on again, everybody's situation is different.
Right.
So somebody in their 70s, they don't want to take risks on the market.
That's the
So
thing. Yep.
so they might want to get a CD, but I won't put
Mm-hmm.
them in no CD because you get other things like annuities and that kind of thing, get more return on your money.
Mm-hmm.
CDs they call certificates of deposits, but I call certificates of depreciation because your money really depreciates while you have your money in there.
Mm-hmm.
And anybody want to sit down and talk to me about that, we can go all day. I show them on paper
And see,
how you lose money.
see, I always thought that based off the rate sheet, because I mean, it
Uh-huh.
seems like the rate and then the APY. I don't know. Anyway, it seems like it's appreciating, but I guess based off of what you're saying, it's
What's
not.
the average rate on the CD?
I don't know what it is now, but I know that it's the longer you keep it in, the longer they say, the more interest you get. That's all I've ever been taught about it.
Have you heard of a rule called a rule of 72?
I have, yes,
Okay, if you take the interest you earn on your money,
right,
divide this, the whole Kathy listen now, divide that into 72,
right.
that's how long it takes your money to double. If the average CD is doing, let's say 3%, it would take 24 years for your money to double. 24.
Mm, not a
So
thing,
a lot of people have their money into a savings account, right?
right. Oh, that's you might as well keep that on the mattress.
Exactly. Because if you only get 1% return on your savings account, it takes 72 years for your money to double. 72 years.
And what's the average life expectancy?
Right there you go. That part.
Right, right.
That part.
That's crazy
So again, it's all about education. Everybody should know the rule of 72.
for
See,
sure.
most people use the rule of 72 the wrong way.
Mm-hmm.
Because instead of using the rule of 72 to accumulate money, they use the rule of 72 to pay out money. Because
Mm-hmm.
what the most people it starts for CC, they have a lot of them.
Credit card.
Right. If the average rate of return on a credit card is 18%, what's 18 divided to 72?
I don't know. No, I don't
Four.
know.
The four, right?
4. Okay.
Well, is that right? I hold my mouth. Yeah, four.
Huh.
That
Okay.
means every four years your money is doubling as far as interest. So that's why it takes so long to pay a credit card off. Not just put big chunks of money on it. See, that's why they get you in school when you're young. And they call them evergreen accounts. Forever, you pay them green. And they know it.
Ooh. That's why. But even too, like when they're talking about interest rates, that's a bank's form of passive income. I think I might have said this before, but that's
Mhm,
how those banks get that passive income money. When talking about money when you sleep, that's how the
mhm.
banks get it with them high interest rates like that.
I know guys in their 50s still paying for a dinner they paid for on a credit card while they
Um,
was in college 30 years ago. Trying to
the
trying to
wine and
impress
dine,
somebody.
right?
You
Trying to
paying for
wine
that
and
credit
dine.
card now. You still owe that same credit card.
But you know what, Mr. Little, I think a lot of this stuff is just like I said, it just goes back to education. We
Hmm.
weren't taught, and I think it's just to me, I think it's generational when we're talking about, coming from slavery, and I'm not trying to make excuses, but I'm just saying coming from slavery, coming
No,
from
you're right.
those
You're right.
inner cities, we just didn't learn. So, when they introduce credit to us, it's like, oh, I can get it right now and I ain't got to pay for the full thing right now.
Look, think about it. Oh, I'm glad you brought now you talking. You about to preach in a minute now. Look, okay, think about this. What was the purpose of a credit card? For you to get things so you don't have to carry money on you,
Right.
not because you don't have the money at all.
Right.
So people charging a credit card because they don't have the money.
Right.
But the
Yeah.
purpose of a credit card was to get things, to purchase things, you don't have to carry the cash on you. And
On
then
you.
you
Right.
pay it back after the purchase or pay it off at the end of the month. But people now are using credit cards like it was water.
Yes. Like a debit card.
Right. And knowing
But
that debt, knowing that the money on that credit card.
hmm but that's
So
why I don't know, Dave Ramsey, that's why he was like cash is king, debt is dumb. But it's like
right.
at this point, you know, I just think a lot of it is we just weren't educated. And I don't think that it's like a whoever's the blame. Is just now we're at the information age. Now we can learn different tactics, learn different things that can, prepare us better for a financial future. But a lot of this stuff we really didn't just know.
Yeah, dude, I believe everybody should go through a Dave Ramsey course, financial
Mhm.
peace course, because
Mhm.
he talks about the rule of 72. He
Mhm.
talks about having a younger person having a good term policy. They can pay
Mhm.
18, 20, $25 a month
Yeah.
for a couple $100,000 of coverages. And
Right.
he talks about also how to invest in the future.
Mhm.
Invest in the future for, you don't put all your money into things that give you low rates of return.
Mhm.
CDs and money markets and all that kind of stuff.
Mhm.
They have its use, but not if you're trying to build something long term.
Right.
Not if you're trying to
Right.
build something long term.
Right. So I guess just for me, because I understand, stock market. I don't know about it a lot, but I understand it. So like when you're talking about like high rates of return, do you think that it's best when you're younger to start off with like stock market and blue chip stocks, dividend paying stocks, etc.? Or like what do you think is the best vehicle for like people that are myself that are younger and trying to, I guess, push ourselves forward to be financially secure when we get older? Because I don't have children and I'm single, so at this point, whatever I can do for
When
like
you sit down with a financial, I mean to cut you off. I'm sorry. Go ahead.
no, you get go ahead.
When you
Financial
sit down
advisor.
with a financial advisor or an investment advisor, you
Mhm.
have what they call a risk profile. The
Right.
risk profile will tell you how much risk you want to take on. The
Okay.
the rule of thumb is the younger you are, the more risk you can take on.
Okay.
And don't let certain individuals try to scare you, talking about you don't take no risk in the market. Now, look, the last 10 years of every market, whether it's been a growth portfolio, it always went up. And
Right.
I can document that.
That's
I
true.
can document that. I can prove it on paper. It always went up. So you have different people in the industry that say, don't do this, get this whole life policy, let your money
Mm-hmm.
grow in there. No, I'm gonna tell you the truth. If
Mm-hmm.
you're 33 years old, you don't need no whole life policy trying to accumulate no money.
Mm-hmm.
So you put your money into a portfolio. You learn how to build a portfolio. My investment advisor, I love him to death. He does. I did this for 20 some years, and I turned everything over to him.
Okay.
He show you how to do things. See, I don't believe in a lot of debt. I don't believe in credit cards and all that kind of stuff. And
Okay.
so I'm not going to teach somebody how to do it
Okay.
because all you're doing is you just delaying a problem. I
Mm.
don't charge stuff. I don't.
Okay.
Dave Ramsey said cash is king, right?
Mm-hmm. Cash can't get this done.
And that's right.
Mm-hmm.
So you got to believe in yourself to a point where you understand the principles. And one principle that I like to go by is the principle of stewardship, and this
Okay.
God's plan to fulfill our life, right?
Okay. Right.
That this God's plan to fulfill our life, and if we live in everything by principles, and what is a principle? A principle is an unconditional truth that when you
Okay.
practice it, it gives you the desired result. It don't matter if you're green, purple, white, black, whoever. It's a principle. If you go on top of the house and you jump, your butt gonna fall.
No, you go
Okay,
ahead. Yeah. Right. Right.
okay, you gonna fall. You're not gonna just start flying. It's called a
Right.
principle of gravity.
Principle. Right. Right. Right.
So
Right.
it's the principle. The principle work for the good, the bad, and the ugly. It
Right.
doesn't matter. It's a principle.
Mm-hmm.
So we gotta live our life more based on principles and
That's
not
true.
based on emotions.
That's very true. And you know what? To your point, you're talking about emotions. One thing that I hate that I missed out on was during the pandemic. It
Mhm.
was so much frenzy and all this stuff in the news. But if you realize so many people made so much money during the pandemic because the market, you could have sold everything and could have made so much money.
Right. Exactly.
Wasn't no planes flying. You wasn't going nowhere. You could have sold any stock you had and you was coming up.
Yeah,
I was
exactly.
talking to my cousin about this a few weeks ago, and he was like, he's like, the next time we ever have another global pandemic, he's like, I'm selling everything because American Airlines low dealt everything was, but they said a recession is a stock market on sale. That's all it is, because that's all it is.
That's all it is. Yes.
Yeah, that's all it is. So, like I said, if I ever, but like you said, when you're talking about emotions and the stock market, ain't no emotions when it comes to that stuff like that. You can't have it. All it is that money. That's it.
And one thing that we got to understand also is that we got to think about everything we're doing in society right now is what they call fashionable. Like
Right.
it's fashionable for us to go get business degrees. It's
Mm-hmm.
fashionable for us to take different courses, that kind
Mm-hmm.
of thing. So, I never worked a job in my life, and I won't. I
Okay.
never filed W-2. W-2 means work too much for too little.
And you ain't
Okay.
lying.
So I would file 1099. When you
Uh-huh.
file 1099, you'll be fine.
Right. Okay.
Okay. Because you learn
Okay.
all the different write-offs. Learn you write $50,000 off, $100,000 off. You learn the different guys. There's a book where there's 478 different ways to write off on taxes.
Is this
Okay.
the ABCs of what's this? The ABC?
No,
What's
this 47, 475, 478. One of them.
okay?
So they'll kill me if I didn't know that book, but because we use a lot of his different teachings.
Okay.
But let me ask you this: would you take swimming lessons from a person who never been in the pool?
No,
So why do we take business courses taught by professors who never had a daggone business?
that's a great question.
Cause see, we're not gonna take swimming lessons for a person who never been in the pool. But we take business courses from people who never taught a business because they have a degree, because
Agree.
they read something. I mean, think about it. I'm teaching you
Mm-hmm.
how to swim, but I never been in the pool now.
Right.
I say, Shay, you gotta jump in the pool, right? And when
Right.
you come up, you start, you gotta do
Move
something.
your hands.
Right? But you jumps in the pool, right?
Uh huh.
But I ain't tell you to hold your breath.
I'm out of there.
You did.
Now I need your
That
life
people
insurance.
see people see people are dying today because they never held their breath when they jump in the pool. But
Mm-hmm.
they're getting taught by professors who never had a business, who
Mm-hmm.
think you should go in business for yourself. You should do this for yourself, do that
Mm-hmm.
for yourself. But they never had a daggone business.
Mm-hmm.
They don't understand
No,
what profit and loss really is. They
right.
don't they understand price elasticity of demand and all that kind of stuff.
Mm-hmm.
That stuff that don't make a hill of beans, but
Mm-hmm.
they don't understand the real world when it comes to things like that. So if
Right.
people will start being taught by people who actually ran a business. So I got a buddy of mine, his name is Chris Durham. This guy started A&T in 1995, and
Okay.
today he made about $1 million a year.
Wow.
Okay, he
Okay.
went from his. I mean, he told me the whole story. His granddad had a little hall farm, a little trailer, all that kind of stuff. This
Mm-hmm.
guy's living a life now, not because somebody that he had him at A&T, went to school with me at A&T, taught him how to go in business for himself. No, he learned from a multi-millionaire that taught him how to go in business for himself.
That's facts. Yes.
They had
100%.
a successful business.
Right. No, I couldn't agree with you more. And I think a lot of this, like a lot of people around my age now, it's more of a popularity contest than it's one result and for two information.
Yeah,
Like to your point when you're saying, you got to get around people that's been to the places that we're trying to get to. Cause I mean, and like no disrespect to nobody, with their education, whatever. It's just the
right.
fact. If they're not producing, like, what's the results and the information that's being conveyed? Other than that, I mean, it sounds good. I like what you're saying, but I want to see, yeah, the results.
Exactly.
Yeah, yeah. So I 100% agree. So Mr. Little, this is my last question. I'm gonna get you out of here on this one.
Okay.
So, how does life insurance protect businesses and or business partners?
Good question. There's a insurance plan called what they call Key Man Insurance,
Yep,
where
heard
you can
that.
take deposit out if the person is bringing a part of your business in and they're at
Right.
least 50% of your business. You can take insurance out on that person or
Mm-hmm.
that a group of people. If they leave the business, if they was to
Mm-hmm.
die, and your business really go down, you can get what's called a key man policy
Okay.
on that person. So key man insurance works for business partners and corporations that you're gonna lose a lot of business if that person's to die.
Okay.
So
Okay.
you can get key man insurance.
So key man insurance. Okay.
Mm-hmm.
Perfect. So Mr. Little, I want to thank you for your presence on here tonight. A lot of information, great pointers, great takeaways. I'm definitely gonna upload this video. It's gonna be on YouTube again, on Facebook. So if ever you want to go back and watch it, or if you want to invite someone to watch it, you're more than welcome to do so. But
Okay.
one more thing, where are you licensed to write insurance policies again? What states are there?
North Carolina, South Carolina, Virginia.
Okay. Okay. So yeah, make sure y'all like him, Mr. Little. His information is on the page. And if you want to get a policy with him, make sure y'all get in with him. He know what he's talking about. He got more than 30 years in the business, and he know resources. He got his resources. And go look at his information. Obviously, clearly, he's producing results. So lock in with him. Again, Mr. Little, thank you. I hope that you go far, and I definitely got to get in with you, because
All right.
this is just tip of the iceberg.
That's right.
But
That's right.
thank y'all
Glad
for
to be
tuning
here.
in. Yes, sir. Thank y'all for tuning in.
Tell
And I
Kath
hope
I
that
say hello.
I will for sure.
All right.
And y'all have a great night.
All right, you too.
Night.